Okay, easy Booker T, easy there, lad. Okay, so it's 11th of January 2024, and as we know, Booker T never, to my understanding, when he was in Harlem Heat in WCW Nitro, he never found Hulk Hogan, but we do think Apple is, well, if Apple was Hulk Hogan, Nvidia is Booker T, and Booker T is coming for Apple and Microsoft. I think we've got it here on a market cap here as well. I think it's Nvidia, I forget the exact calculation here, I think it's 2436. So on the market cap, we're at $1.3 trillion here. So Nvidia is just pulling back, but we'll have a look through the other stocks while we're at it. I think it's just pulling back. I mean, I can count 5 into here. So, you know, you can see this has the potential to go very, very high. See yesterday's video. That's going to go all the way. The day Nvidia tops is the day the world's going to end. Now, let's start off with Bitcoin. The enigma that is Bitcoin. That's not going to go anywhere for the next couple of years, let's be honest. I mean, that doesn't look like a good candle. Obviously, we've been calling for a crash down to 30,000. It's pretty much... I mean, you know, nothing's really occurred. We got in down here. We said 44k. It superseded the expectations by another 8 or 9%, which is really nothing. And now it's formed a bit of a dodgy wick. So to me, if you couldn't count the C wave here, we did say there was the potential for one more new high. It's taken 6 weeks to make a new high. That's really not how you make the money. A lot of this move was done ages ago. It was done about 6 weeks ago. You can definitely count 5 now into here. That's the C. That's the potential W. And really, that makes the most amount of sense. There's not a lot of volume up here. Every time there's an ETF, it seems to top the market. Now, Novogratz is expecting a correction short term, which is fine. Buy the rumor, sell the news. He's expecting an immediate return to 69k and beyond. I'm not expecting that, obviously. I'm not reading this as an impulse, and I've never read this as an impulse. Frankly, this high at 69k should never have occurred. The real high should have been 20k, but there's no way I could have forecast stimulus checks. I mean, monopoly money getting handed out to retail traders. I mean, what do you expect? Is that likely going to happen again? I don't think so. And while probate checks are printing, they're not on the level of stimulus checks. So to me, this is going down towards 30k. And if it wasn't a top, you know, on the last video, it's definitely a top now. And the concerning thing is that's on very high volume. There is an obvious, you know, buy the rumor, sell the news, but it doesn't mean it can't happen. High volume, shooting star. If you get confirmation tomorrow and next week, you know, we're going to have a lot of issues because there's an unfilled gap there, a lot of gaps down here, and basically it's 30k. So, and also we've now caused a wick on the yearly chart. That's the other thing. So you kind of have to watch out for this. We now have a wick. Yeah, it's not a big wick. It's only just occurred today. We've run the high from 2022. This is the yearly open. That would get really better. So whilst it's all looking very nice and green for the year, things can soon change. I mean, what was the year start here was here. So anything underneath here and a retest, suddenly all of that is the big shakeout. Next thing you know, we're going much, much lower. And there's an obvious event in about 3 months' time, which is the halving. Often we've always had a correction. So I don't think that there's much to update. Only 3 ways to make money. Be first, be smart, or cheat, or listen to Booker T. Right? So you got to be first, be smart, or cheat. There's nothing to do here. In fact, there was nothing to do even 6 weeks ago. It's not about eking out the last 5 or 10%. That's not how you make money, right? Dynamic risk and reward over time. We've said this is how the curve looks. So nominally, there was nothing to do. Solano, we got in at $4 followed by $20. Whilst everyone on Twitter was drawing random lines left, right, and center. There's nothing to do. It's topped. So if Bitcoin has topped, where's this going to go? 50. Kind of gave away there here. TradingView should really not give too many things away. That's where it's going to go. You know, Coinbase has a 10,000% moves in weekly put options since here. It had superseded the target by $20. It's way overstretched. Anyone who cannot see from here, it's going to 100. That's a nearly 50,000% move in weekly options. That doesn't look good. Way overvalued. This is not about price, time, or volume. It's about all 3 of them, and they constitute value. This is not good value for Coinbase. Let's take a volume profile of everything from the lows. Once again, all documented on the group. Just like we were buying Nvidia at 396. over 25,000% move in Nvidia call option since 396. It's at 518, and it's going to go much higher, right? We call this low, by the way, this low, this low, this low, all of them, and it just superseded the target by around $15. Where's that going to go? Where's the value? Where's the actual time and volume been spent? Well, there's not a lot of volume up here, is there, really? So you can also bring it up on the fixed range volume profile. So let's just, the visible range. Let's just increase the resolution. That usually I like around 150 or 250. It doesn't really matter, but I mean, as you can see, there's really not much to say on Coinbase. Anyone who can't see that's going to go sub 100, or Solano is going to go to 50, is not worth listening to, right? So we called all of these moves, and they're all documented in the group. Now we'll have a look at Ethereum. So from the lows, we said 2,500. We said we're never going to see 5,000 ever again. I know there's people who are running this as a 1-2, 1-2, 1-2, and that's fine. Too many shrimps on the barbie, I understand, down there, down under in Sydney there, but not much we can really do about that. You know, to me, I think it's extremely unlikely in the next 10 million years you're going to see that high getting taken out. You know, some things like what's Alibaba doing? This might actually be worth buying. I mean, we're kind of having tickles here in Alibaba. Yeah, I mean, it's very oversold, and it's basically undershot everything last year. So the stock market, well, the Nasdaq's gone from 8k to 15k last year, and this has gone down, right? Now, you know, it's very oversold. Pessimism is at an all-time high in Chinese stocks. So I think we're ripe for a bounce at some point. You can't really go wrong buying at the IPO price from nearly 15 years ago, or however long it was. When did they IPO? 14. So nearly, 9 years ago. But what we do like is, just like Bitcoin has formed a wick going down, this needs to form a wick going up. So you try and find the December low, which is here. So ideal situation or setup on Alibaba is one more new low, then more importantly a reclaim of the level. Yeah, because that is last year's low. Where is the yearly open? That is here. So I think Alibaba is setting up for a nice little trade back up to 100. It might take a good year to get up there, because we are in the crematorium for retail traders. That's what Alibaba is. So that's the yearly open. That's last year's low. So this is the pattern that needs to occur. I mean, I suppose you could buy here, but why would they run this up without running this low? So a run below, now not a retest. If it does this, then does this. That's very, very bearish. I don't think that's going to occur. I can't imagine Alibaba falling much below 70, frankly. So go underneath, go above. Right, we talk about this on the masterclass. No need to draw random lines all left, right, and center. Just take the masterclass. Everything's there. It pays itself off in one trade. One Nvidia trade from last video. That's it. That's 10 masterclasses paid off. So very useful before prices increase. There might be a 10% discount code flying around somewhere. You guys can find it either on the website or the Facebook page. So Alibaba, swing below, run these stops, reclaim, then reclaim the yearly open. Suddenly we're talking about a very bullish setup, right? So you got to be able to try and forecast what these candles are going to look like by the US election, by the end of the year. And then where is the obvious target? Last year's high, right? So this starts off looking very terrible. It's not quite formed the pattern. Pattern may not occur, that's fine, but we have a plan for Alibaba. This is how you forecast plan. So literally, should the pattern do this, 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 this? Yeah? Something to look at there with Alibaba. So stock market, we'll go into that next. So I think Bitcoin, just to make my feelings clear there. So I mean, so what if it's just gone up for a little while longer? I'm not reading this as impulsive. That's not a good looking candle. I think if we get follow through tomorrow, that all looked like a distribution to me from a while ago. That looks like a Wyckofian distribution. It doesn't look like a reaccumulation. Gap up, retail FOMO, buying climax, automatic reaction, distribute the shares. UTAD 1, UTAD 2, UTAD 3, up thrust after distribution. If it's so bullish, why is it producing a candle like that? So what we need is confirmation, I suppose, right? So if you want confirmation, it needs to have bearish engulfing candles on higher sell volume and reduced down volume. So reduced down volume and higher sell volume, because obviously we're going down now and not up, right? And you can see the gap there. So I think if it starts to move down and breaks down out of this range, effect is proportional to cause. That's been going sideways now for over, I don't know, I mean, how long is that? Maybe 20, maybe 30, 40 days now. You can easily get quite a vicious move going into the halving, and then we can reassess at 30k. So that's what we're going to do in the group. We're going to reassess. So I don't see Bitcoin offering anything at these prices. Obviously, if one is of the opinion that this is not an X wave, right? So I think the long-term count is W, something like this. I don't know exactly how this X is going to get drawn, right? Now, worst case scenario, that's the X. Now, if that's the X, that's a catastrophic collapse. Now, technically, that is valid, by the way. I don't want to say that's not valid, right? I think, however, this is more likely. A drawn-out X wave for another year and a half. Nvidia tops, the world ends. That's it. It's all over. Then everything crashes to effectively zero. But technically, this could still happen. Either way, it's too risky being long. It was risky being long 6 weeks ago. I have no idea why is it still at 49,000. Basically, I'm not of the opinion real value is getting bought up here. I'm not of the opinion that Goldman Sachs or smart money is buying up here. They buy wholesale, they don't buy retail. So this is not Costco wholesale prices. This is Walmart Target prices, right? And that's more retail action. Wholesale would be back down here again, where all the volume and the time has been spent, i.e. value. So we can reassess after the halving. Right now, way too risky to be long. Don't really have anything to say. I use Coinbase as a leading indicator. Coinbase has, I don't see how Coinbase can't go down to 100. So, puts start to print very, very well if you catch a good turn, because the market goes up in the escalator and down in the elevator. So I don't think there's anything more to be said on Bitcoin and Ethereum and Solana and a few others that we were in. We were in Think Meme Coin, that was a 5x move. And we're in the Bitcoin Minitrex. So hopefully when stage 40 ever takes place, I think it's on stage 18 or 19 right now. So I'm expecting that to get released, and very much a BitConnect scam, really. But even BitConnect made some people a lot of money. Yeah, I can't even find it here, so I forget what the ticker symbol is, but that might be something worth for you guys to have a look at. So obviously we discuss various coins in the group. Now, S&P. So this is pretty much from the last video. So there's not much else to be said. It's a cup and handle formation here. So obviously, it's not going to take the exact fractal that I've just shown here, but that is just the mirror. It's just, this distance basically added on to the neckline. And basically, we're looking at 5,600. Eventually, I think this gets more to like 6,600. But my feeling is this year, 2024, is statistically should be pretty much a break-even year. But it needs to be broken down into quarters and halves. So rather than the first half being bearish, and then the second half bullish, i.e. back to break even pretty much. Okay, so my end of year target is around 5,000. Let's just keep it nice and simple. So how do we get from 4,700 to 500 by the end of the year? I think the first half will be bullish. I'm not sure if that will be, right till the end of Q1 or somewhere between the end of Q1 and the end of Q2, right? I'm expecting Q1 pretty much to be bullish. Once this correction is over, and we'll go into the short term in a minute, February, March, end of Q1 target, I'd say about 5,200. Then somewhere between the end of Q1 and basically around the Bitcoin halving, actually, I'm expecting the S&P to top. I don't know exactly when it's going to happen. My current forecast is April to July. Could happen as late as June, could happen as early as April. But somewhere up here, it's going to top out. Then we're going to start effectively a 6-month decline into the US election and the end of the year, and thus break even on the year, right? I'm not convinced this is going to be a 2023 year. You have to have a game plan for the start of the year. Obviously, in this move down, which I'm forecasting Q3, Q4, fine, there might be a little B leg here. We're saying Nvidia is going to be the world's most valuable company. So obviously, it's not going to be a straight line. There's bound to be pullbacks. So it could get up, to 700, 800, then pull back, then continue its rise. Because after this, I'm not forecasting this as the real crash. So this will just be a pullback. Let's say, hypothetically, it gets to 5,600, let's say. My end of year target is 5,000. So we could easily get a 10% pullback Q3. So at some point during Q2 or Q3, Q4, we end the year at 5,000, and then 2025, post-US election, with RFK, probably, let's be honest, we then start, as it turns out, the last and final leg. And then we crash, basically. At some point, I would say late 25, 2026. So that is the game plan. That has been the game plan for over a year and a half now, right? We have to have a framework for what we think is going to occur. I refuse to believe in a flat. I refuse to believe in a real impulse. It's like a corrective impulse, i.e., a diagonal, as it turns out, an ending diagonal to end the world, right? And my forecast is eventually, I'm not sure when, 2025, 2026 more than likely. I doubt this bull market has got legs past 26. I don't think that's going to happen. I think we're going to start to see cracks now, as you're already seeing with the CPI. My long-term forecast is 14%, by the way, in CPI. But anyway, let's not give too much away. We're just giving too much away. So yeah, that's it. We're not going to discuss CPI here. So, but I'm not expecting it to go down. That's all I'm going to say. It's never going to go down towards 2%. It's going to be a lot worse, and in fact, it's going to be the opposite. So you kind of have to know what to be in, and that's what we discuss, because it's important to know some of the macro. You don't need to be a macro expert, but everything can be charted. So you don't need to know lots and lots about inflation and all the other nonsense, really fundamental economy and all the indicators. You don't have to know any of that. Everything can be charted. If you can chart the interest rates and the inflation, you know exactly when it's going to go and where. But that is the forecast right there. So higher Q1, Q2, and then lower Q3, Q4, break even on the year, 2025, kick off the last and final leg of this secular bull market, which, one of the longest ever. I mean, 08 to 2025, how long is that? 17 years? So it's, we are massively extended compared to previous cycles. I believe the post-Second World War to the 1960, I mean, that was one hell of a cycle. And I suppose 70 to 87 was quite a long cycle. So, 17 years is really cooking it a little bit. Cycles don't usually last this long before a correction. So, you could read, I mean, it depends how you read all of this crap here, but it's just an ABC, 1, 2, although you could read that as an A, B, C, D, E, bit of a triangle, and then the real impulse started from here. Either way, 78, 74 to 87. How much is that? 74, so it's 13 years. Yeah, I suppose it's 11 years from there, 13 years. But the post-Second World War, I mean, that was a really long cycle. So let's assume you don't count it from here. You start counting from here, a bit of a 1, 2, obviously, 1, 2. So let's just count it from here, 42 all the way up to 68. I mean, that was a 26-year cycle. Even if you count it from here, what's that? 49, 68, what's that? 18, 19 years. So this is what I'm saying. By 2026, it'll be an 18-year cycle. That's pretty much the max. I mean, I suppose even this was quite a big cycle, really. So 87 to 99. How long was that? 2000 minus 87, 13 years. Yeah, so this is what I'm saying, isn't it? This makes perfect sense. That was 13 years. That was around, 13 years. And the post-Second World War, fine, that was a lot longer, but it was a different market then, and we were starting off the impulse. And obviously, a lot of economic repair had to take place based on what had occurred the last decade prior to that, So, that was a unique situation. So, it had to be a long cycle, I suppose, because we were so depressed. Everything was basically effed up. So, everything had to be repaired. So there were a lot of changes then. So I don't think you can really say that this cycle is going to go on for 26 years. That's not going to happen. So, the more recent cycles, I think it's perfectly fine to say 2026 is probably going to be the end, and then we're looking at some kind of correction. Even if it doesn't take out 666, it doesn't matter. It's bound to at least do something like this. I don't know the exact shape. I think worst case scenario, it's an ABC down. It's a 1929 all the way down to here. If that doesn't happen, as a minimum, it's a very severe correction. The exact time, the exact percentage decline, obviously that's unknown, but Elliott Wave doesn't lie. It's the same tools we've been using throughout the last 7 years here, and certainly I've been using since 2008, and it works. So worst case scenario, that's a very large correction. So that's the long-term count. Those are the cycles there. Now, not too sure why I've taken all that off, really. Let me just Control Z there. We need some help from Booker T. Right. So that's it. Now, I think we've explained all of that. So that's the Q1 projection, Q2 projection, and obviously Q3, Q4. Now, here, the only thing I would say is, well, there's a few things I would say. Number one is, I mean, today's move looks a bit flatty. Doesn't have to be a flat. We kind of broken above a key swing level, failed, a bit of a shakeout pattern in progress. So worst case scenario, this is just a 335 flat, right? This doesn't have to take place. The market's way too bullish. I mean, I'm not expecting Nvidia to come all the way back down sub 500, but that could be an ABC. I'm not saying it is, right? I'm just saying it's possibility. So 335 flat, so 3 and 5, so you can see a move down to 4600, retest some of this pivot level action. Now there's probably a gap there because there's a gap on the ES, so there's bound to be a gap here too. Well, you can't see it here, which is a little bit strange. I mean, the gap's all the way down here at 445. I don't think it goes that low. It's the gap on the ES that I'm looking at here, which is here. So once again, I'm not happy with there being a gap there, right? So the rest of January might be a little bit difficult. They've chucked a little bit of a curveball here, so we need to sort of get people nice and bearish, and we were expecting this at the end of last year. We said they might chuck in a flat. That's usually what they do, and the C wave off a flat looks impulsive, obviously, right? Because it's 3, 3, 5. So it's very easy to get the C leg confused with a wave 1 down. Obviously it is, because they're both 5 legs. That's what makes flats very, very sneaky. Likewise with zigzags, by the way. Even a zigzag, you could argue, is the start of a 1, 2, 3. Of course it is. It's a 5, 3, 5. So to me, if they convert it into a flat, we're going to go 4600. And that'll be the kindling to get everyone nice and bearish, because I'm sure every video out there will be absolutely convinced, right, the ES is in a large flat. Has to be a large flat. We've taken out one side of the range. I'm sure every single count, should this occur, right, that's it. It's all over. We're going all the way down to 3,500, right? And, we've seen that so many times. Here, 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 here. We've called this move perfectly last year. Absolutely perfect. Every single move nailed on. We were calling for this move to be BS. The Q4 rally, we've nailed it all. So, and, you can count 5 into here. So 5, they might chuck in a flat. And even if they do chuck in a flat, who cares? It just means that the rally won't ensue right now, although it can, right? I want to give both options here. It could just reverse. And then, we end of January, February, March, boom. So this is the thing. Even if we pull back, the end of Q1 is in like 11 weeks' time. We could still be much, much higher here. So, depends if you're options trading or futures trading, or whether you're just SPY passive ETF. I mean, passively, the SPY is bullish. It's going to go to 6,500. I'm not convinced under any circumstances we've reached a point of euphoria. We're nowhere near a euphoric kind of level yet. So that's my take on the ES and the SPY, really. So if you get confused with the SPY or the SPX, just understand that I'm switching from the futures here to the spot, as it were. Also, by the way, that would retest this cup and handle too. So, this cup and handle neckline here, that also comes in at 46. So, frankly, a move down to 46 doesn't have to occur. It would make perfect sense if it does occur. Get people nice and bearish, and the hedge fund positioning is actually surprisingly bearish right now. So we're just going to add to those shorts, whilst the retail positioning, surprisingly, although perhaps not so, is very bullish. So how do you shake out more retail traders out of their longs and get the hedge funds even more short? You do a quick whoosh down, V bottom, boom. End of Q4, we're back up at 4,400, 5,400, yeah? But it is going to be a difficult year, though, because of the US election and various other things. There's going to be a lot of volatility. I think net, it's going to be a break-even year, so you have to know how to manage it. And statistically, based on the Santa Claus rally, which was negative, by the way, and the first 5 days of the year, there's enough statistic evidence, as well as being in an election year, mind you, that this year is going to be subpar. I don't think you can repeat 2023. However, the initial half will pretty much be bullish, second half will pretty much be negative, and then 2025 kicks off the new leg. That's why I can't make the Bitcoin 6k call, because it would contradict my opinion on the S&P. Because if we're saying Bitcoin's going to 6k, I mean, I suppose it could happen, but it's just not my base case. I think that's too bearish. I think 15k is going to remain the bottom here for quite some time. So this is what I'm saying, yeah? So let's hopefully everyone can see this. So this I don't believe is going to occur, because that contradicts this. Because I'm saying 2025, we have to complete the last leg here. That's why I'm saying Bitcoin will likely do this. This what I'm showing here is likely going to occur in this 2025 move. Then everything's going to crash all at once, and then X, Y, Z. So I don't think you can call that an X wave. I think this X wave is getting drawn out, and I've remained in that idea really since the top a couple of years ago, because that top should never occurred. Really, that should have been the top. And that should have been the greatest call ever in human, which it already is. It already is. I mean, it's documented on YouTube. They've deleted it, but you're going to have to join the Facebook group to see the video. We called the top and the bottom 7 months before it occurred. It was handwritten, shared on Twitter. So everyone knows about the videos. So 69k should never have occurred. And I don't believe in stock to flow models or anything else. I don't think that that's all that valuable. I think technicals supersede any of that. But well done to people who are holding Bitcoin. I think they've done really well to hold through all that. Personally, I think Nvidia will return more than Bitcoin this year. But hey, that's just me. Okay, good. So I think we're just rambling now. So that's it, really. So we'll start off. Well, we can kick off with a. Well, we can end with a Hodge Twin video here, but we'll start off with Booker T. But Booker T was about to say something that he really shouldn't be saying, Booker. So we're not going to replay that video anymore. Oh, we're not going to commence that video from where we paused it there. So that's Booker T. He's a good lad, isn't he? Anyway, that is it. If you want to join the group, you know what to do. And take the mortgage amortization course. Very good time to be refinancing mortgages. So that spreadsheet might be very useful.